So this is US oil analysis for Tuesday the 23rd of January. Now, let's have a look what happened with prices and where they may likely go. So we've had two tests over here on the on US oil, and we have seen upside has been somewhat limited. We did go into a bit of a small mini range here on the hourly chart. Not for any great length of time. We've come back down, tested the 63.05. Again, we found support down there, highlighting 63.05's importance. We've had this impulsive move somewhat, I would say it's impulsive, especially this candle here that we did see some sell side momentum come off. We did break above this 63.76 before coming down to test the 63.05. From which it's all pretty obvious. We can see here momentum has taken us through the 200 period averages here marked out in blue. We are currently, we've got a 200 period moving average as well as a horizontal level at 63.76. We've currently come back down for a test, and we do appear to be holding the 63.76 and the 200 period moving average as support. Now, if this continues to hold the 200 period moving average and 63.76, we're possibly looking for further upside continuation, which again is in line with the higher time frame trend of oil being to the upside. Now, if we do have the further upside continuation, we are looking for the prices to head towards that 64.76. And the reason 64.76 is important is because 64.76 has been the high in, well, it's the high of 2018. Yes, the highs of 2018 so far. Highs of 2018 so far and our most recent highs. So again, we're looking to target our most recent highs and the highs of 2018 so far. If we do break above the 64.76, which are pretty much our highs of 2018, we are looking for prices to head towards, bear with me a second here, 65.60. So a break above the 64.76, we're looking for prices to head towards our 65.60. If we do get sufficient market volatility and we do trade above, we'll anticipate us trading much beyond the ATRs. The ATRs have fallen quite a bit on oil, but if we did trade above the 65.60, we get sufficient market volatility. The very next level that we are looking at to the upside is in around the 66.71. If however we're not able to hold the 200 period moving average and 63.76 confluence, we are looking for prices to see selling momentum enter the market and prices head back down towards our 63.05. Now, it has been tested 3 times, so it may not hold on a 4th test. So if it doesn't hold, if 63.05 doesn't hold for further upside continuation for a test of 63.76, possibly up towards that 64.76, we'll be looking for price head down towards the 62.54 level. Major level marks out here in red. Again, we're looking there to see if we do find support. Further adding to the likelihood of possibly finding support at that level is a 400 period moving average, in around that level 62.54. So we have got dynamic support as well as a horizontal support, further adding to the likelihood of a potential bounce. If however we are able to navigate both the dynamic and horizontal support, we are looking for price head down towards that, wow, quite a bit away, isn't it? 61.48. Currently trading around 64. I can't anticipate there being that much volatility on oil to the downside. So again, looking at in around the 62.54 being the far end of the range. At a push, I suppose we could look at $62 a barrel. But overall, if we have a look at a higher time frame, say the 4-hour chart, we can see here on this 4-hour chart, and let's make it automatic, and there we are. So as you can see here on this 4-hour chart, the overall trend on US oil, also known as WTI, has been to the upside. Okay, we've come back a bit off the highs of 2018 so far. We've come into a bit of a trading range here, but overall, we've had a strong move to the upside. It's just maybe it's a case of the market taking a breather before we see further upside continuation on US oil, especially if we do continue to hold this 63 level. So we could potentially have a contraction squeeze here. Well, it's already happened now. we've currently posted a very bullish 4-hour candle here. So unless we do head back down towards our 63.05, thus invalidating this very strong bullish candle, we do seem poised for further upside continuation on US oil, which again is in alignment with the overall trend on the higher timeframes. And with that said, that pretty much wraps up the US oil analysis. Thanks for watching.